Welcome back to Harvesting Income. Today we are going to discuss about the battle of two covered call index ETFs. One of them is called XYLD or the Global X of S&P 500 Exchange Traded Fund, and the other one is the SPYI, NEOS S&P 500 High Income ETF. So let's get started. Player one. Player one is the XYLD Global X S&P 500 Covered Call ETF, and this is from the Global X ETF Fund House. And the strategy of this fund is to generate regular income in the form of premiums through covered call writing on the S&P 500 index. So basically, they write calls on the S&P 500 and generate regular income. Simple strategy, and we will also do a comparison of the strategies to understand better. So stay tuned for the next section of the video till the end. So you will get a clear picture of each strategy and what works best for certain types of investors. Let's look at the player two, which is SPYI, NEOS S&P 500 High Income ETF. This is from NEOS Investments or NEOS Funds. This strategy has some similarity to the previous one. Uh, as the first bullet point says, they seek to generate income through covered call writing. However, there's a minor um, extra, features they have. SPYI writes covered calls on the index constituents or the stocks within the S&P 500 index. Plus, they can also write calls on the index itself. That's a minor difference. And also, they have other loss harvesting, feature as part of the fund. You can go to the fund website to get more details on the tax loss harvesting part of it because it's a more accounting and tax oriented subject. You should take advice from a qualified accountant about this area because it's a specialized one. And also, the fund uses call spreads, call spreads which capture the upside in rising equity markets. So one of the main complaints of covered call ETFs is that they give up the upside when the market is rallying and going up, 5%, 10%. Covered call ETFs basically cap the returns. In this case, SPYI is able to capture the extra upside. So that's plus point of the SPYI. Let's look at the key metrics of the exchange traded funds. So I will try to go one by one and see, you know, how each of them compare, so that we can get a clear picture here. The first one is like the history or the inception. So XYLD started back in June 2013. So basically they have a 11-year history. And SPYI has a 2-year history, not bad. Like we have enough data and enough track record to look at for SPYI. However, in terms of the longer history, XYLD is more OG and more experienced, and they have an experienced management team. So I would, on the experience part of it, history part of it, XYLD has a slighter edge, but SPYI is not far behind. Like they are also, building up in this area. And if you look at the distribution yield of these funds, this is based on the last 12 months performance. This performance can always, change or vary. The distribution is not going to be guaranteed. So that's a caveat or disclaimer. What you see here is just the current, the last 12 months performance. XYLD is able to generate about 9.7%. Like it's able to do like close to 10%, and SPYI was able to deliver about 11.8% over the last 12 months. So, if you look at it comparatively, SPYI has an edge over XYLD in terms of the dividend yield. Uh, so that's, the point goes for the SPYI in this category. And let's see on the expense ratio, who is better here. XYLD obviously has a lower expense ratio at zero point 0.6 compared to 0.68. I would say it's a slightly skewed towards XYLD, but comparable. Like it's not that. And given the fact that SPYI's strategy is more superior and involves extra upside capturing, paying 0.08% extra for that, I don't think it's a big deal. So it's justified. So I would say it's almost equal, but I would give an extra point for XYLD. The next would be portfolio composition. Like portfolio is kind of similar, but there's a difference here. XYLD holds all the S&P 500 stocks. They just follow the formula or the composition of the index, or you can say they mirror the S&P 500 index. However, SPYI has a little bit of twist here. They select stocks of the S&P 500 index based on certain parameters, like, and they also use certain data-driven, analysis or models to pick certain stocks of the S&P 500, and they also write calls on those stocks or sometimes on the index itself. So there is a difference in the portfolio composition and the strategy. The last point is more relevant for the XYLD, and so that it's about the income payout, like how they pay out the income earned. Uh, it's defined for XYLD that they will pay 50% of the premium earned in the form of dividends. For example, let's say the fund earns about $1 per share as a dividend. Let's say dollar one example. So in that case, they will be able to pay 50 cents or dollar 0.05 as a dividend for that respective month. So depending on how much dividend they generate, they would be paying out 50% of that. Why 50%? Because they want to retain the other 50% for reinvestment or maintaining the value of the fund. So that's the whole idea. But if you look at the other side, if you look at the SPYI, they don't have this payout policy specifically defined. However, they have the upside capture, which is an advantage. We look at that earlier, and we don't have any information available about their payout policies, so we cannot comment on that. Um, so with that, we are coming to the end of the key metrics. We'll move to the next area. It's going to be interesting, and that is the strategy itself. We have to closely examine the strategy to understand the different layers of the onion. We have to peel up and find out how they are different. Um, we already know that XYLD follows a simple strategy of just following the index S&P 500 index. They write calls on the index. However, SPYI can write calls on index or the stocks which are part of the index. So they have more flexibility in also writing call options on the stocks, which can be quite lucrative because stocks are more volatile than the index. And tax efficiency is another edge that SPYI has over XYLD. So SPYI will have an edge in terms of tax efficiency for investors who are looking for that feature. And as far as the portfolio coverage, like how much of the portfolio is covered under the whole call writing, in XYLD, they write calls on the entire portfolio. Like they don't do like, half of the portfolio or 25% or any specific percentage. They write calls on the entire portfolio to generate maximum income. And that is how the fund generates income. That's their policy. And for SPYI, it is a dynamic kind of call writing. Like they can write up to 100%. It could be slightly lower, um, depending on the market conditions, and that's how this is different. Like SPYI can still write lesser amount of calls and give you the opportunity to capture extra upside. So that's the plus here, SPYI, and the extra upside capture is achieved in SPYI using um, out of the money calls they write on the portfolio. So which is not available in the case of XYLD. So, so put it in a very quick summary. Like I would say that XYLD is good in terms of a simple, routine rinse and repeat strategy. However, SPYI is going to give you that extra upside or that extra yield, as we saw in the previous slide. SPYI was able to give you like close to 11, sorry, 12%. 11.8%, close to 12% because of that extra upside capture. So I would say, as far as things stand here, like both are almost equal, but SPYI has a slight edge in terms of the upside capture, upside return capture. Okay, let's look at both of them quickly side by side and see, where they stand. Um, as I said, XYLD is a simple, plain vanilla strategy, no scope for appreciation. Uh, and whereas SPYI has a robust strategy with scope for upside. And in terms of dividend yield, XYLD is able to match up to, low double digit. SPYI has around 12% yield, slightly higher on the yield side. On the expense ratio side, XYLD is slightly lower, but we are getting higher yields in SPYI despite the slightly higher expense ratio. So it's still, you know, things seems to be more, favorable for SPYI. SPYLD has a longer history and SPYI is slightly shorter, but it's not bad actually. They're doing well and they're able to generate good returns too. HYLD has that payout policy which can help them in terms of conserving some cash flows if there is a market downturn. So they're able to retain 50% of the income so that they can, you know, prevent any kind of NAV erosion or help sustain the NAV. And whereas SPYI doesn't have that policy, so this payout policy is actually is giving an edge for XYLD, and for SPYI, the side capture is giving the extra advantage. So basically, they are trying to compete on in a different way. Like XYLD is giving you that payout policy to give you the comfort in terms of NAV stability, whereas SPYI is telling you that I can give you an upside capture, extra returns, and upside, which will help you grow in terms of capital appreciation when the market goes up. So they're just trying to do it in a different way, different strategies. So, but one point I wanted to stress here: the dividends that are paid are based on the premium earned by the funds through call writing. So when there is a highly volatile market and the calls are written, the premiums will be relatively higher and there is a opportunity for making more income. So the payouts can be good, dividends can be variable, and it can go up and down. So past performance is not an indicator or guarantee for future, as mentioned below. So take it with a pinch of salt, observe these funds over a period of time and see how they perform. And I would say even if you pick um, one of these funds initially, you can always change over to the other, but see what suits your requirement or goals and pick the fund accordingly. You can pick one of them, or you can pick a little bit of both. It's your option or your choice, or you can even look at other funds in the same space. Uh, but I would say both are good funds with a decent track record and decent returns, and good for an income investor. And for other types of investors, you can add it as a small part of your portfolio. So I hope this video was useful. If you like this, please feel free to share with your friends or family. And we will come with more such videos in the future. And I hope you have a good day. Thank you.